Welcome back, everyone, to the Market Chronicles. Great to have you with us for episode 15.
Oh, good to be back.
Today, we're doing another deep dive, and this time we're looking at some really interesting comments on where Bitcoin might be heading.
Yeah, specifically from some audio featuring Samson Mow. He lays out a pretty bold vision.
Absolutely. So we'll unpack that perspective,
Yeah.
its implications, the whole 9 yards. And hey, if you're watching on YouTube, do hit that subscribe button. Helps us keep these analyses coming.
Okay, so let's jump in. Mow's price trajectory ideas are quite striking.
They really are. He doesn't just talk about hitting a certain number. There's a whole path laid out.
Exactly. He sees Bitcoin moving towards $200,000, then $300,000.
Okay.
And he mentioned something called omega candles, these potentially huge, sudden upward moves that could really accelerate things, maybe even pushing towards $500,000.
Right. And that $500,000 mark? That's significant for a reason, isn't it? Something about gold.
Precisely. He points out that $500K Bitcoin would be roughly half the market cap of gold.
Half of gold.
Wow. And that's where he thinks things get really interesting. He suggests this could be the trigger point for what he calls the demonetization of gold.
Demonetization of gold. So
Well,
people just stop seeing it as the ultimate store of value.
kind of. The idea is investors look at Bitcoin going from 0 to half of gold's value, relatively quickly, and realize, wait a minute.
They see the momentum, the
Yeah.
potential.
Yeah. And that realization, that shift in perception, could then cause a major capital reallocation away from gold and into Bitcoin, potentially driving the price up towards $1 million.
He put a time frame on this whole journey, didn't he?
He did suggested something like 17 to 18 years potentially, which sounds long, but in the grand scheme of monetary shifts.
It's actually quite compressed, historically speaking.
Right. Now, this ties into his view on fiat currencies, too. He believes there's an eventual breaking point.
A point where the current system just doesn't hold.
Yeah, where holding fiat just isn't desirable anymore compared to Bitcoin. He sees this shift happening somewhere in that $500,000 to $1 million Bitcoin price range.
So he's critical of models that just assume Bitcoin and fiat coexist indefinitely with some exchange rate.
Exactly. He mentions things like, the Sailor Bitcoin 24 model or power law models. And he says they often miss this potential fundamental break. He just doesn't buy the idea of a perpetual exchange rate.
And the reason for that break, in his view, comes down to the technology itself.
Pretty much. He calls Bitcoin a far superior technology. Maybe 100x, even 1,000x better than what we have now.
That's a strong claim. What's the core advantage he highlights?
It's the ability to move value instantly or near instantly across the planet
Okay.
for minimal fees, like a few dollars, and with finality. That's the key.
Finality. Let's unpack that a bit because it's crucial.
Sure. It means once a Bitcoin transaction is confirmed sufficiently on the blockchain, it's basically irreversible. It's settled. Done.
Unlike, say, a credit card payment, which might look instant, but the actual final settlement between banks can take days, and chargebacks are possible.
Exactly. That final settlement aspect is a huge difference. Mow sort of suggests that understanding how money really works, these deeper mechanics, has become a bit of a lost art.
Interesting point. Okay, so shifting gears slightly. What about stablecoins? Things like Tether. Where do they fit in Mow's picture? Are they competition?
He actually argues they're not direct competitors. It's more like they reflect the current reality that most people still prefer dollars, or at least dollar-denominated assets.
Right. They offer a digital dollar experience.
Yeah. And he points out that even Tether, the biggest stablecoin issuer, is actually involved in Bitcoin mining using yield from their T-bill reserves. So they're participating in the Bitcoin ecosystem.
So they're not trying to undermine Bitcoin, necessarily.
Doesn't seem like Mow thinks so. He acknowledges Tether's massive user base, like 400 million people, showing there's clearly huge demand for something like stablecoins.
A demand for digital dollars, essentially.
Right. And he distinguishes these private stablecoins from, say, central bank digital currencies, CBDCs. He brings up the Canadian trucker protest, how private issuers might act differently than a government.
Okay, fair point. Different incentives.
His argument is basically that stablecoins filled a void, met an existing demand. If they didn't exist, maybe something else similar would have popped up.
And the size of that market shows the demand is real, over $115 billion in stablecoins, right?
Yeah, it's significant. And Mow even suggests that perhaps even the issuers see stablecoins as sort of an interim step, a bridge towards people eventually moving to Bitcoin.
Interesting perspective. So what about generating yield or lending in this potential future Bitcoin world? Right now it seems risky.
Oh, definitely. Mow calls the current situation a weird transitory period. You have the risks of custody, holding your own keys, and we've seen all those failed yield schemes like Celsius and others.
Yeah, huge blowups. So what are people borrowing Bitcoin for now?
Mostly shorting the price or using it as collateral for loans, it seems. Those are the main uses currently.
But looking further ahead, could lending become more common if Bitcoin becomes more established?
Mow seems to think so. He points to history. People have always lent hard assets, gold, silver, for interest. So why not Bitcoin in a post-hyper-Bitcoinized world, as they call it?
Makes sense. There would likely be demand for capital.
And he touches on deflation, too. Suggests that if you have sound money, like Bitcoin with its fixed supply, then deflation driven by technological progress isn't necessarily bad. Prices go down, but your money holds its value, or even increases in purchasing power.
That's a very different way of thinking compared to our current inflationary system.
It really is. Now, another angle he touches on is wealth targeting.
The idea of governments going after the wealthy, especially during tough economic times.
Exactly. History's full of examples. But Mao points out a potential problem with wealth taxes. The demand for money is effectively unlimited.
True. But could a small group of Bitcoin holders still be vulnerable?
That's the risk he highlights. If ownership is too concentrated, those few could face persecution.
Which brings us back to adoption.
Right. Widespread adoption, including by nation-states, is crucial. It provides protection through dispersion, and Mo argues can be a force for good.
He mentions Bhutan as an interesting case study, right?
Yeah, relatively high per capita Bitcoin holdings, potentially through mining. It suggests a path to self-sufficiency for some nations.
And maybe oil-rich nations like the UAE or Saudi Arabia could fund massive mining operations too.
That's another possibility he raises, using existing wealth to secure a position in the future monetary asset. Of course, setting up mining isn't easy.
There are barriers, obstacles, energy, infrastructure, regulation.
For sure. But countries with advantages like Canada with its energy resources, even if potential is reduced from past estimates.
Or places with geothermal like the Philippines, Indonesia.
Exactly. Those places could have a strategic edge. Mo sees a future where countries adopt Bitcoin strategically, maybe even using mining revenue to fund social programs.
And this leads to competition between nations.
He predicts massive competition to attract capital and, specifically, Bitcoiners.
How would they compete? Lower taxes, favorable regulations.
Potentially even zero taxes, no capital gains on Bitcoin. Jurisdictions might race to become the most Bitcoin-friendly.
So being a late adopter in setting those policies could be a major disadvantage.
A huge disadvantage, potentially. He thinks there's a growing realization, maybe a wake-up call, that printing money indefinitely just doesn't work.
A wake-up call for governments across the political spectrum.
He suggests both left-leaning groups wanting social programs and countries in general need to understand sound financial principles to attract capital in this potential new era.
And El Salvador is kind of the early small-scale example of this.
Yeah, he uses them as an example, showing that even just having simple, non-stupid policies and being openly positive about Bitcoin can attract significant attention and investment.
So wrapping it up, Mo's painting a picture of Bitcoin not just as an asset, but as a fundamental technological and monetary shift.
Definitely. Driven by its tech advantages and, frankly, growing distrust in the existing fiat system, and widespread adoption, especially by nations, is seen as absolutely pivotal.
It really forces you to think about the long term, doesn't it? Considering his perspective, what are the biggest shifts, maybe personally or societally, we should anticipate if Bitcoin's influence grows like he suggests?
That's the big question, isn't it? How do individuals, businesses, even governments adapt if the very nature of money changes so fundamentally? It's a lot to think about.
It certainly is a fascinating perspective to consider. All right, that brings us to the end of this deep dive for the Market Chronicles.
Thanks for tuning in.
Absolutely. Thanks, everyone, for joining us. Keep thinking critically about these developments, and we'll catch you on the next one.